Welcome to our first Opening Door webinar. My name is Vanessa Pham and I'm a Research Relationship Manager at Macquarie, working in their Asset Management division. Now, if you don't know what a Research Relationship Manager is, don't worry, there's an opportunity later on to ask all about that. Joining me on this webinar is Miriam Herold, who just last week started her new job at AMP as their Head of Superannuation Trustee Office Investments. So congratulations, Miriam. We're fortunate to have Miriam with us here today, sharing her career journey and insights with us. Miriam has had many different roles within the industry. She's worked in Australia and overseas, and we look forward to hearing all about it. But just before I hand over to Miriam, I'll go through a few housekeeping rules. So the session qualifies for CE points. You'll all be on mute, but we do want this session to be interactive, so please use the Q&A box to ask questions throughout the session. We'll try to answer as many questions as we can on this call, and if we don't get to your question, then we will follow up afterwards. For those that have enrolled in the June exams, the Institute and Sydney Society either have been in touch or will be in touch with you to get that process restarted. So please look out for those emails. So without further ado, let's hear from Miriam.
Thanks, Vanessa. It's good to be here today, albeit virtually from my lounge room, as I'm sure you all are. So today I thought firstly I'll give you a bit of an overview about me, take you through some of what I've done in my career and my studies. And then I thought I'd talk to you a bit about some of the takeouts from that I can offer in terms of a few different areas. I think one area which is pretty important is work, life and study balance. And so some tips and takeouts I have in that area. And then I'm going to talk about the CFA Society and really how important it is, I think, not just from the study perspective, but also from other benefits you can get there in terms of networking in the broader community in Sydney. And then finally, I'll just finish off with some of my own personal sort of study and career tips that I've picked up along the way. So I always enjoyed economics and markets. So when I finished school, I decided to study a pretty broad Bachelor of Economics. So I majored in economics and econometrics because I always found maths quite good, and I was quite good at statistics. So I thought it was a natural sort of area. So I didn't really focus in any particular area of financial markets until I finished university. And I started off with an asset manager at AMP Capital, in an investment analytics capacity. So that was a pretty good broad grounding for a graduate position, learning a lot about a lot of different asset classes, risk, performance, portfolio analysis and so forth. So I was fortunate enough after a few years to move to their London office, where they still owned Henderson Global Investors at that point in time. So I guess that's the first key takeout that I would say, that if you get the opportunity, it is really valuable to work in a number of different locations, I think. So Australia is quite a small market compared to a lot of different global areas, and that experience that I had working in London really brings a different lens to things. So I think it's always an exciting opportunity, whether you get the chance for a secondment or to work with different areas of your business offshore, just to get that different point of view. And different markets have obviously different industries and different types of speciality. So I actually started my CFA program when I was quite junior. So I was in my second year working. So I did the first 2 levels in Australia, and then when I was in London, I did level 3 whilst living with 5 other Australians in a share house, which was an interesting experience to say the least. But it was actually a really great opportunity because then passing level 3 did open up a lot of doors. So within Henderson, I was then given the opportunity to move into the equities team. So they were looking for someone specifically with the CFA qualification. So I moved into equities and really got to know that asset class in detail, and worked for a few years at Henderson on the buy side, before moving over to an investment bank to work on the sell side. So that would be, I guess, the second takeout, that I think it's really important if you get the opportunity to work for a number of different types of organisations. So working for an asset manager is quite different from working for an investment bank, and also quite different from working in, say, retail versus institutional. So I think you can get a broad variety of different skills and also insight into how different investors think by working in a number of different types of institutions. So I did move back to Australia at the time of the GFC and continued in equities in both an analyst and then later a portfolio management capacity in the Australian marketplace, both in sort of quant and fundamental analysis. Post that though, I have moved back into more of a multi-asset research and portfolio management type of role. So I worked for a number of years as an institutional PM and then more recently in retail advice research, so building portfolios and also providing all of that investment market expertise to financial advisors. So I guess that would be the next takeout, that it is really good to specialise in particular areas. So I did spend about 6 or 7 years in equities, but it's also equally good to have a broad knowledge across different asset classes. So there is sort of no right or wrong, and I think that it is important to move into areas that you feel interested in and passionate about, even if it's not really a linear approach in your career that one might determine. So most recently, as Vanessa mentioned, I moved back to AMP, where I started as a grad all those years ago. But in this role now, I'm working for the superannuation trustee. So the whole purpose of the team that I work in is to ensure that the members are getting the best possible outcomes. And so my expertise is from an investment perspective. So I think that aligns really nicely with the whole values of the CFA Society and the Institute as well, that it's always about the best outcomes for investors and being able to make sure that you're managing conflicts and behaving in an ethical way, I guess. And so that's the role now that I'm doing, is I guess wearing that ethical hat for the trustee to ensure that the other areas are being held to account to manage those conflicts between commercials and investor outcomes. And so that's, I guess, me in a nutshell and where I've worked in a few of those key takeouts. So I think some of the takeouts that I would talk about as well are the work-life balance. Because in any role, there is always a lot more that you could do. You could fill your time, you could work every night, and you could still find things to do, I think, in the investment community. And I think it's really important that people manage their own work-life expectations, particularly if you're studying as well. So a lot of people, when they're at work, they feel guilty that they're not at home with their children, or that they're not studying. When they're studying, they feel like they should be working more. And I think particularly for women who have children or who aspire to having a family, that can be really quite a source of guilt. So I'd say some of the tips that I've developed there, because I actually have got 6-year-old twins myself as well, is that you need to set aside time in your life to satisfy each of the requirements that you've got in each of your goals and purposes. So whether you like to run a marathon or learn French, or just want time out to do some yoga or meditation, it's very important that you schedule that time, I think, in your calendar at the time that you're going to do it. And it's just as important as going to meetings as well, because it's important to have that healthy physical and mental focus in your life. So that's something that I would definitely advocate, putting it in your calendar, and it's there, it's not negotiable, just like going to a meeting. And the same thing with children as well, that you might need to pick up your children from school or from daycare, and then you can come back and do work later. So it doesn't matter just because you're stepping away a little bit earlier than someone who might be working in the office later. I don't think you need to feel that you're doing less of an important job or less committed to that role. So I think it's important to set goals professionally and academically, and also personally as well. So things that you want to achieve in the next 5 years and so forth. The next thing that I thought I'd talk about is really the CFA Society. So, I mean, the first instance, yes, there are the 3 levels of the exam, and you do get a very broad education and an understanding of many different parts of the investment management related industry. But I think even more important is really the society in Sydney. So there are a huge number of networking opportunities within the society. So ranging from educational events that are on at lunchtime, social events that are on in the evening, to formal and informal mentoring and networking events. And I think that that's really one of the areas that I would encourage you to get involved in. So you can meet some very high profile people that work in very different parts of the industry. at these types of events. And often it's really who you meet at a point in time, and letting it be known to them that you might be interested in an opportunity where they work, so that then down the track they might remember that as well. And I think that's one of the most important things, is really to get involved in that networking and the social aspects. Also, I'd say from a continuing education perspective, I wouldn't limit myself to saying, okay, an invitation came through maybe about a private equity education session, and my current role has nothing to do with private equity, so I won't even consider it. I think really keep your options open. So even though you may not, from a work perspective, on a day-to-day basis, be involved with an asset class, it really can't hurt to learn more about areas you don't have a strong understanding in, because you can develop an interest. It can relate to you later down the track, or it just might be something of interest, and to meet those people for that networking opportunity. And also, I think it's really important to try to make the formal and informal mentoring. So if you see a woman particularly who might be in a role that you aspire to do one day, or to move into that area, then I think you really should reach out and make contact as well, because as they say, if you don't ask, then you probably won't get. Someone's probably just not going to come up to you with an opportunity unless you've made it be known that you might be interested in that area. And the final bit that I thought I'd cover off on, just in terms of some tips that I had, were in terms of study and career opportunities as well. So I think for study, because it is very hard to juggle full-time work, if you have a family, other interests, as well as studying for the CFA. So just some of the tips, I guess, that I took from when I was studying for my level 3, particularly I remember in London. Probably not as relevant today, but it was to use your commuting for a good purpose. So you can spend a lot of time commuting normally in life, not right this month particularly. And I used to always read my CFA notes on the way to work and on the way back from work, particularly ethics, because I found it was just something that you could read again and again and again, and then it sort of sinks in. Also, one of the other tips that I would have is that I find that I'm more of a morning person. So work out, when do you learn best? When you're fresh in the morning, or are you more of a night owl? And then assign the time to do the study at the time that suits you. So I would make a point to get to work at 7 o'clock in the morning, and I would have about an hour and a half or 2 hours that I would spend in a meeting room studying before my work started, because I knew that that was a time that I wouldn't be interrupted. And so then it all adds up, and by the end of Friday, you've had an extra 10 hours of study, and then I would devote probably a day on the weekend to study, so that you had some downtime for one day on the weekend. So they were just some of the tips from me. And just in terms of the study tips as well, as I mentioned, some of those takeouts, that I think always keep your options open, because even if you think you want to go down a particular career path, it is always good to know about what's happening in other asset classes. If you're working in retail land, it's good to know what they're doing in institutional land. If you work in a super fund, it is good to know what investment managers are doing as well. So it broadens your knowledge set, but it also helps you to be more engaged with different stakeholders and understand their perspectives.
Thanks, Miriam. On the studying, I would add that for me, practice exams was so helpful. If you could devote the last 2 weeks of your study just to do practice exams, that's when you're getting the most benefit. That's where everything is being absorbed and being put to good use, and that would put you in good stead for the actual exam. So we do have a couple of questions come through. So thanks, Miriam, for that comprehensive update. That was very good. So we can either launch straight into the questions, or I've got a couple of questions that you have sent through previously that you want to discuss. But we might start with that. I had a couple of people ask what sort of careers you can have as you go into finance. Now, there's being an investment analyst or PM, that's quite well known. I spoke earlier, I'm a relationship manager. And what that it's essentially a business development role but you are the representative for your corporation when you're dealing with clients. So the more of a relationship role than a technical role, but definitely a qualification like a CFA is helpful in that respect as well. Other areas, there's investment. People often get asset management and investment banking confused. Miriam, do you want to maybe talk about the difference between them, since you have been involved in both areas?
Yeah, sure. So I mean, firstly, there are a number of very different areas within investment banks. So when I worked for an investment bank, I worked in equity research. So essentially, they're people that cover stocks. So not unlike an analyst that will work for a fund manager. However, typically at the investment bank, they only specialise in one sector. So they have a very, very in-depth knowledge of the sector that they're covering, and they'll be the people that will develop very in-depth models, usually DCFs if they're industrial type companies, in spreadsheets to forecast basically at the end of the day whether a stock is overvalued or undervalued and whether you should buy or sell. And so I guess the difference between, I'd say that's the sell side, and they're called the sell side because they work with the bank, the investment bank, who will also have the trading floor and who will also have the sales traders as well. So in the past, the analysts would get paid by fund managers directing their trades to that investment bank and basically tagging the commissions. So you'd say, okay, for instance, example, if Vanessa covered transport stocks and we think she's a great analyst and she told us a really good update on Qantas, and we wanted to make a trade based on her analysis, then we would trade through her investment bank and we would tag it and say Vanessa gets the commissions for this particular trade. So that's all kind of unwound now after the GFC to avoid conflicts of interest, so that fund managers have to actually pay research now rather than just direct the commissions and so forth. So in another area that you could work in the investment banks is capital markets. So equity capital markets would be raising capital. So recently NAB did a giant capital raising, and so that's the equity capital markets team that go out and they structure how they're going to offer that. If it's to institutional investors, if it's to retail, they go around and drum up that business and get the commitments there, and the investment bank will underwrite that as well. You'd also have M&A. So obviously, if companies are going to take out another company, then they need investment banks to provide them with the structure and the deals and also the financing there. On the other side of capital markets, you'd have debt capital markets. So companies that are issuing debt, they'd go to the investment bank. So basically, you can think of it, I mean, a bit like a big retail bank like CBA, except their clients are big corporations, and the things they're doing from them are raising capital, raising debt, providing equity research, and so forth.
When I think about asset management versus investment bank, I always think asset management, you're investing with a much longer time horizon. You're investing on behalf of clients for sometimes 5 to 10 years, whereas investment banking, it's more focused on perhaps quarterly earnings or doing the one-off deals such as the IPOs or the M&A transactions. And the different time frame brings different pressures. So you may have heard of the hours involved in investment banking. It's not the same as asset management. We're a bit more relaxed in asset management. But aside from that, there are lots of areas that you can get into. There's marketing, IT, operations, fund accounting. Huge varied roles are available to you in the industry. The one thing I would say is that with all of these areas, you will benefit very early on in your career if you have strong technical knowledge. And the CFA is really the international standard for technical excellence. And that often will make you stand out from others when you are thinking about getting into your first job or competing at those the entry level roles where it can be very competitive.
Yeah, I would agree. It helps in terms of transferability of skills as well, so that if you've worked in one area and you've got your CFA, you've got the technical expertise to know what other areas do, even if you may not have worked exactly in that area before. I think another big growing area as well that there's opportunity for working are the asset owners. So I guess the superannuation funds, for instance, industry super. So that's quite different from investment managers because they're actually, the trustee taking really the ownership of the assets on behalf of those beneficial owners, the members. And so they can choose to appoint either an external fund manager, such as someone like Macquarie, or some of them can do it in-house themselves as well. So that's another kind of growing area, I think, where there's opportunity for investment expertise.
Yeah. We've got a question come in on pretty much what we've just been talking about. The question's asking, if you want to get into investment without the experience, how do you get that first job? And Miriam, interested in hearing your thoughts, but I think what you've touched on with transferable skills is quite important. If you don't have the experience, it's really critical to show the transferable skills, and having the CFA obviously shows the technical skills as well. But the other area, and Miriam has also touched on this, is the networking. If you network within the society, it gives you access to a lot of very senior people in the industry, which can help you along the way.
Yeah, and I think also, for instance, if you say I want to become a portfolio manager in equities, then you're never going to get a job straight away as a portfolio manager, but you can think about what could be a path to get there, to learn the types of skills. So obviously it would be great to become an analyst, because that would probably be the step before being a portfolio manager. And just thinking back, if you've got less skills, say, than an equity research analyst, it could be more of a broad-based investment analyst who's looking at different types of funds, the performance, the risk. I think it's showing that you've got the types of skills, and then as we've mentioned, having the CFA designation as well will then show that you've got the technical knowledge as well to sort of transfer those skills in. So it could be saying, yeah, I want to be a portfolio manager, so I'm going to start by looking for a more operational or analytical role within an investment manager, because once you work somewhere, I think it's always easier to take that step internally with transfers. They look more favourably, I think, on people that they've worked with who may have worked in a different team, but they've seen their ability and their expertise there.
Thanks, Miriam. I've got a question on age. I'm in my late 30s. Is it too late to start the CFA? And the answer is definitely not. It is never too late to start learning. Actually, you never stop learning. So definitely give it a go. In terms of the industry, there's a lot of focus recent times on diversity, not just women in the industry, but diversity of thought, of background, of age. So being a different profile to a recent graduate could work in your favor, because you've got all that life experience to back up your ideas and thoughts, and that is often it's well received, and people are starting to recognize that diversity of thought is it's good for business. So I wouldn't let age or any of the other demographic profiles stop me from doing a CFA if that's what you want to do.
And also from a practical perspective, because I was recently doing a lot of work on retirement income portfolios, the life expectancy of people is so much higher than it used to be, and people are working longer. And I mean, given this massive stimulus package that the government has just made for COVID, we'll all probably have to work till we're about 80 to pay off this debt. So the fact that you're in your 30s, I think, in 2020 is very different from if you're in your late 30s in the 1970s, because I really don't think that people are going to work along that same path and say they hit 60 to 65 and then retire anymore. I think even if people do want to cut down on work, they may move more into consulting or part-time work, because I just think the economy and job functions are really changing in that whole outlook as well.
There's a question here about passing level 1 and having completed a master's in banking and finance, and where to start with job roles in the market. Miriam, do you want to?
Well, I mean, I would say if you're looking at what's available, it's probably always a good idea to speak to a recruiter who can give you some guidance, who can just give you some information about what's out there at the market, in the market at the moment. Because I think at this particular point in time, from what I've been reading, a lot of companies are putting hiring freezes in place, and recruitment is a little bit subdued because of the economic outlook. So I think it's a good idea to get really the lay of the land from some recruiters to work out exactly what's going on at the moment. And then, as we were mentioning, it's not a bad idea to come along to some of the either education events or the social events and just talk to some people, get the networking going. As Vanessa was mentioning, there's some very high profile people, and apart from that though, there are people at all different levels. So people may work in different organisations and know who's recruiting. But it's also important to think about what type of role you really want. What do you want to do in investment and banking? Because there are very varied roles, and if you're more into communicating with people on the relationship side, you might want to move more into sort of that relationship management type role. There are roles that are sort of a hybrid of relationships or investments, so sort of investment specialist type roles. So it's important to think about what you want to do, what would make you happy, and what aligns with your skills as well.
And think about what organisation you want to be a part of. Sometimes it's easier to get your foot in the door by joining the right organisation, perhaps in a role that's not right for you, or even just a contract role to start off. But once you're in there, it's much easier to move around. So joining the right company it's pretty crucial to where your career could take you, and also having the right boss. I mean, I think as you start out and throughout your career, having the right boss is just absolutely critical in terms of the mentoring they provide you, but also all the development that you can take off them, and the guidance, and having someone to cheer you on. It's very important.
I think culture is really important as well. So as you mentioned, you've got to work out what type of company you'd like to work for. So there are pros and cons to big companies and small companies. So if you go to work for a very large asset manager or investment bank, there are going to be perks. You know, you probably have gyms, you know, they might have team for the city to surf, they'll have different corporate events and things. Whereas in a smaller company, you might not get that, but you might get exposure to a lot more of the business than you would, and it would be a very intimate culture, I think, as well, in terms of getting closer to a lot of different people within the company. So it really depends on personally which culture you think is what you would prefer.
Yeah, so find the culture that aligns to your values. And I guess don't be too stressed out about getting that job straight away. The job you want is probably 2 or 3 jobs away. So when you are starting out in the industry, focus, get into the industry, do the job well, and you will have faith that you will be able to progress from there. I've got a question. This perhaps is a little bit more macro focused. What is the opportunity and challenges in post-COVID-19 for asset management? There's going to be lots of challenges and opportunities. The future is pretty uncertain at the moment. I guess what I would say before handing over to Miriam is there are some things that never change though. The technical skills that you need to do your job, that remains the same. The fact that you are there to serve clients and do what is in the best interest of your client, that again doesn't change. The medium that you do it through may change, the platform, the way you interact with clients may change, but at the end of the day, we are still here to provide our clients with solutions that are appropriate for them. And to do that, you need the relationship, you need the technical skills, and you need to have their sort of their well-being at the forefront of everything you do, and that remains the same.
Yeah, I would say that there are going to be quite a lot of opportunities as a result of the economic downturn from the COVID-19 pandemic. So, I mean, firstly, we've had such a long bull market in equity markets for a long time that there was this huge flow into passive funds that really you couldn't do wrong by going into some cheap ETFs. And I think that the big decline that we had in the stock market, through March, is quite a bit of a shake-up. And I think it's actually going to improve the outlook for active management, and it's going to make people realise that you can't just make money by staying in the market. So for active managers who've been able to position themselves well, and if they've provided downside protection, then I think it's actually quite a positive to show that there is a reason that people pay fees for active management, which has probably been a little bit overlooked in the past 5 to 10 years. And I think that there will be opportunity in particular industries and particular types of stocks. So for instance, if you look at a lot of the online retail has actually done really, really well compared to bricks and mortar, obviously, which has been closed. Some other beneficiaries have been the buy now, pay later types of companies like Afterpay and providers of, Zoom calling, all of the online functionality and internet providers and so forth. So I think that there's actually some good opportunity for fund managers and for people to identify those types of industries. And also in terms of coming back to that work-life balance, I think a lot of people have now proven to their managers and to senior management that they can perfectly capably do their job from home, that there's no reduction overall in the level of productivity. And I think that that's going to increase the flexibility. So if people want to continue to work from home, I'd say that it would be very, very hard from probably an HR and a legal perspective for companies to say you can't work from home at all, because you've already demonstrated the ability to do that. So I think firstly from work-life flexibility, people might arrive at the solution that they can work from home part of the time and in the office part of the time. And then that'll actually help companies to reduce costs, because they'll need less office space if they can have part of the workforce working remotely. And also reducing costs through travel. So for instance, earlier in the year, if I had business meetings in Melbourne, I would fly down to Melbourne for meetings. But you would think now that after this whole working from home remotely, management would be more inclined to say, well, Microsoft Teams works quite well, just have the meeting on Teams, everybody can dial in. So I think that although there are negatives certainly from the economic downturn, I think there are some positives that as an industry will flow through, and particularly because investments and finance sort of tend to be quite a conservative type of industry, who'd be less inclined to pick up these flexible arrangements than say tech, whereas now they were forced to. So I think that it'll be harder to go back and make changes to say nobody's allowed to do that anymore.
And that's especially important for women, especially if you're a carer, if you want to work part-time in this industry. Traditionally, it's been a little bit harder. Hopefully, COVID has shown that people can still be as effective, and that would open more doors for people seeking those flexible working arrangements. And traditionally, that has been women that have sought those opportunities more than men. So that's positive from that perspective. I've got a question. I know we're over time, but as long as you're still on the line, we're happy to stay on and continue this for a little bit longer. There's a question here about having a lot of experience in accounting but wanting to move over to finance. The question is, do they have to start at an intern level or entry level position to make that transition? I would say that don't be afraid to take a step back, or what you perceive as a step back in your career if you're making that move. Because very often, once you've made that move, you do find that you progress much quicker than someone that is starting out with absolutely no experience at all, because all the transferable skills that you have, which may not be taken into account when you got the job, it will definitely come out once you're in the job and can prove yourself. And your career projection in your new career will be much faster, even if you do take that step back initially.
Yeah, I would say, and there are probably some particular areas that often see people move from accounting and audit into investments. And so looking at equity analysts, equity research analysts, the bread and butter, particularly of sell side, is knowing your way in and out of financial statements. It's knowing how to pull them apart, use all the different ratios. So a strong background in accounting and audit is going to translate really well into an area like that. So it would certainly mean that you wouldn't start as an intern. You would start at a less senior level, but nobody's going to have perfect knowledge of everybody. So if you don't have a strong background in accounting, so some analysts come from industry, so you may have worked for a transport company, so you understand the strategy and the industry dynamics, but then their shortcoming would be the financial statements. So nobody's going to know all of the different parts of the puzzle. So that's sort of a strong skill. I think in corporate finance and M&A as well, accounting and audit would certainly be a strength to bring across there as well, just with that knowledge.
I've got a question on how to utilize networking opportunities brought by the CFA. So there's the CFA Society, there's lots of committees putting on lots of events throughout the year, and as a member you do get notification to all of those, and I would encourage you to just show up. Many of the events are free, and if they do charge, it's quite a nominal charge, and we do that to encourage our members to engage with us.
Yeah, I think the important thing is just to go up and introduce yourself to people as well. And that's like any skill. It could be daunting at the beginning, but once you get into the swing of doing it, it just becomes quite natural. So at these events, you've got to go up and talk to people. Nobody knows who everybody is, and you go up and speak to somebody there. They could be the head of investment management at a major fund manager. And they're just as happy to talk to you as they would be to talk to somebody with 20 years experience. So I think it's about actually going and introducing yourself, finding out what people do. And then once you get to know people, you'll see the same people at different events that the CFA Society puts on. They'll know who you are, and then that could be an opportunity to say, I'm really interested in bond investing. Oh, you're the head of credit analysis at this particular fund manager. So how would I go about getting an opportunity to work with the team down the track, or getting some more information? That it's just about making your intentions known as well, because if people don't know that you're looking to move into a particular field, then they're never going to offer you the opportunity. Whereas if you've discussed it with them before, then they might think of you when they're looking for somebody, as a junior role, or at least tell you that there's a position vacant as well.
Thanks, Miriam. And I was going to say something, it completely escaped my mind. It'll come back to me. We had a question before the webinar on career potential for women in finance. I'm not sure where this question is coming from in terms of jobs. Perhaps it's from the perspective of being a carer or having that additional carer responsibility. What I would say is, in my experience, all the jobs that are available are quite accessible to women as equally as men. There are obviously jobs, more client-facing roles, jobs that require more travel, where perhaps it is harder if you do have the carer, if you are a carer or have primary carer responsibilities. But that's changing as well, and people are open to flexible arrangements in those roles. You just have to find the right organization. Again, it's about aligning your values with the organization, and there are lots of organizations out there right now that are very vocal about wanting to employ women, that have just come back from an extended career break, or women that have that want to change careers and move into finance because they're at a different stage in their life, and they're much more demanding industry no longer works for them. So there are programs out there that help you with these transitions. If you're looking for something specific, perhaps reach out to us afterwards, and we can answer that question. Miriam, do you have a?
I read something quite interesting recently that was just about the different approaches of men and women, and that the key takeout is really not to undersell yourself. So they did a study, and there was a job description advertised, and the men that were applying could typically only meet about 50% of the requirements of the role, but had this confidence that they said, well, I can do it, I can learn, and just put their CVs in. But when they looked at the women, even women that could meet about 80% of the requirements didn't feel that they should be applying. So there was quite a difference in the approach and the attitude. So I think don't undersell yourself. I don't think that a lot of women don't throw their hat in the ring when they should, and it's about that attitude. And I think they have similar findings as well from men going and asking for pay rises and reviews, whereas the women feel that they are not entitled to it. So it's not everybody, but I just think it's something to be mindful of, to not be too shy, to really go for things that you want, even if there's a gap and you'll have to do some learning, that you shouldn't let that put you off.
That's right. I know when we're recruiting at our company, we're always struggling to find the female candidates, wondering where they are. Perhaps last question. This is on career path and career planning. Miriam, do you have any advice on career planning?
Well, as I was mentioning when I gave a brief summary of my career, I think mine has been very non-linear, that I've moved from different types of roles. So I don't think there's certainly a right or a wrong, whereas some people have started on a career path and just moved their way along that. So, I would always say that you've got to do what you're passionate about. If you've got an interest in something as well as the skill set, then you're really going to enjoy your work and do a lot better at it than if it's something that you're not really passionate about. So that's why I would say don't box yourself into too small an area if you're not 100% sure what you really want to do. And even if you are 100% sure, if in 5 years' time you've changed your view, it's okay. It's okay to pivot and use your skills in a slightly different role, because it's not going to negate all of your past experience and knowledge. You can take skills and experience from one area into a different area and apply them as well. That's right.
I should add, so my background has been in research. I spent about 10 years doing manager selection in a research capacity, and I moved over to a sales business development role only about 2.5 years ago now. And initially it was to me it seemed like a big change, but actually it wasn't very different in the end. All the skills and knowledge that you've accumulated throughout your career, you'll be able to apply in a new career path. You come at it from a different angle, different perspective, and your organization may even value that different perspective that you bring. It is different for everyone. When you're starting out, I wouldn't limit my career options. I would be as open-minded as possible and really say yes to everything and just take on new challenges. You just don't know what will take your fancy. All right, everyone, we've gone 15 minutes over time. That's fantastic that everyone's still engaged and online. Thank you for dialing in. We will probably send out feedback form afterwards. If you have the time, please complete that. Let us know what you think, because we really want to continue to give you, provide you with these services as a member. And even during COVID, we're quite keen to keep all of this engagement going. So we'd appreciate if you let us know how to best engage you. And if this is the right avenue to do it, we'd love to do more of these. So having said that, thank you for joining me. Thanks, Miriam, for your time. Fantastic answers. Thank you so much. And thanks, everyone. Bye for now.
Thank you. Hopefully we'll see you all soon for some physical networking.
Yeah. Drinks.
Bye.
See you.